Hello and welcome to this FinGraphs podcast on Dukascopy TV. Today we're going to have a look at some cross-asset analysis, namely the S&P 500, Euro, Gold, and a bit on US interest rates. So we'll start with a mosaic on our fingraphs.com platform. We're looking at the mini S&P future, Euro, US dollar, Gold, and the US 10-year Treasury yield. On a weekly basis on this upper line, so the perspective over the next few quarters, and on a daily basis on this lower line, or the perspective over the next few months. What we could say is that the S&P is still in an uptrend on both frequencies, on the weekly and on the daily, but that it is getting quite overbought short term. We can see that the weekly is overbought, so our risk index is in the red here. And similarly, it is also overbought on our daily graph. We could also see that our targets have been pretty much met and that both our envelopes are touching each other on both frequencies, which would point to some exaggeration. So we think equity markets are quite overbought at this stage and could be subject to some intermediate retracement. In the meantime, what we could say about Euro and Gold is that they have been correcting for a few quarters. That means since the beginning of the year for the Euro and since August last year for Gold. We do believe this is an intermediate correction and that at some point over the next few months, both should manage to resume the uptrend. What was interesting to see is that there was a strong exaggeration here in August to the downside, so a nice support point on both assets. And we do believe that they will probably have difficulties making it much lower. So our view is that we will rather see a range over the next couple of months, base building process until both could resume their uptrend, probably into next spring and new highs. Now looking at treasuries, what we could say is that this is a nascent uptrend. It probably has more potential into next spring. Probably it will have difficulties making it above resistance, around 2.1%. But in the meantime, it is still retracing, and our indicators and our trend indicators and target indicators are still telling us that we may see 1 or 2 months of retracement or a continuation of this consolidation, which started this spring. And then finally, from mid-late Q4, a resume uptrend situation in order to attempt to make marginal highs, we believe, next spring and potentially make it up to above 2%. Looking at them in detail and quite quickly, we can see that the S&P 500 is still in a bull on the weekly graph, but is kind of exhausted in terms of targets, in terms of our envelopes and our risk index. So this also points to an intermediate top. On the daily graph, we have a similar position. We do have our envelopes touching each other. Impulsive targets have been met, and we are also in the overbought zone. And a correction may have started last week on our hourly graphs. We can see that it's now come down to the support zone of a corrective target. We may work here for a few days, but we do believe that we could break below these. And the next level of targets is pretty much towards the lower end of our envelopes here. So pretty much towards 4,100, 4,200. So the possibility of a 7 to 10% correction from the highs into early mid-October. Again, we believe this is intermediate, that the S&P will stabilize during late October and into November, and then rise again to new highs into next spring. Looking at the Euro, we believe that this is an intermediate correction. The envelopes are still heading up, and that this intermediate correction at some point should be able to find support to move higher and possibly towards new highs into next spring. Looking at the daily graph, it's still a downtrend for now, but we have this strong exaggeration on our risk index, which was very oversold back in August, and we believe that these levels will hold. So that over the next couple of months, we expect a range and a base building process, perhaps into mid-late October, perhaps early November, and then gradually a resume uptrend situation, which we believe could lead us back up towards the mid to high 120s into next spring. Shorter term, we could see this retracement. It is still moving lower and it's reaching the support of our corrective targets to the downside. We may break slightly below them towards 117, but we do believe, again, that the lows that we did in August should hold. So over the next couple of months, yes, a bit more risk perhaps over the next week or so, but in general, we expect a range between 116.5, 117, and perhaps 119, 120. And we should finally be able to break out of this range towards mid-late Q4 towards new highs next spring. Looking at gold, we have a similar analysis. We can see that we've been in a correction now for a bit more than a year, that we've held the support of our corrective targets to the downside. So that's a good sign, basically, that the move does seem corrective. The daily graph is attempting to move up in an uptrend. It was very oversold back in March. It was oversold again here in August. So perhaps we already have a base here. And we do expect more work here. Similarly to the euro into October, perhaps into early November, a range perhaps between 1750 and 1850, and then by mid-late Q4, the beginning of a new uptrend, a breakout, and then a move up towards the spring and new highs, potentially above the ones that we did a year ago, so above 2000, possibly towards 2100. Shorter term, the RE is correcting. It is also getting towards support. We may break slightly below them, but in general, also here, we do expect more of a range over the next month or so. And again, we believe the 1750, 1850 zone seems adequate. Thank you very much for your attention, and we wish you a very good week of training.